In December 2019, when the news of Covid-19 hit the main headlines worldwide, you all saw just how immense an impact that had on our global economy. No jobs, no capital, stores shut, social restrictions, travel restrictions, need I say more? As you all know, the economy was pretty much battered left, right and centre. But let's be honest, that's like what, news from 6 months ago? And most of you probably already know that. So in this video, I'll be focusing on the road to recovery for the global economy from Covid-19 and of course, the impact it has in the stock market. Hey guys, so I'm going to just jump straight into the first question. How long before the economy fully recovers from Covid-19? Well, that's a bit of a tricky question considering the fact that we don't actually know whether the economy is going to recover or not, especially in the near future. And also, to get a better idea of how the recovery is going to happen, we're going to have to take a look at the recession shock shapes, which are the V, U, W and L shapes of recession. I'm just going to briefly go over the recession shock shape so that you get a better idea of what could potentially happen in the future. So firstly, we have the V-shaped recession. That's basically when the economy suffers a brief but sharp decline, but that's followed by a strong economic recovery. So that's really the best case scenario that we have. And then we have a U-shaped recession, which is a lot longer than a V-shaped recession. This is basically when growth drops precipitously and an economic recovery takes a lot longer. Also, as you can see from the graph, it doesn't rebound back to its initial path. And then we have the W-shaped recession, also known as a double dip recession. This one's pretty interesting, as you can see by the shape. There's an economic decline, followed by a short period of growth. Then the economy falls into recession again, and then finally there's recovery, giving it the W shape. And then finally we have the L-shaped recession, or depression, which is basically a severe form of recession where the economy just continually declines and there's no new investments or inputs in the economy. This can take years, if ever, to really recover from. So that's easily the worst case scenario. So now that you all know about the recession shapes, it's just a question of what shape we're going to see in the future. Is it going to be the V shape? Well, for a V-shaped recession to occur, the economy is going to have to spring back pretty quickly to how it was pre-crisis levels. And do you really think life is going to be the same anytime soon compared to how it was pre-COVID? If the economy reopens at a measured pace and people start returning to their normal behaviours and social distancing also continues, then we could potentially have a U-shape. But let's come back to that and move on to something that is more probable. The W shape. When the economy does reopen with a small period of growth, who's to say that people won't jump straight into bars and pubs, completely ignoring the social distancing rules that they were to follow prior to the reopening? That's when you'd have a W-shaped recession, so this could be 1, 2 or even a dozen outbreaks each time the economy tries to recover. That's when you'd have a very squiggly W-shaped recession. And then there's the L-shaped recession, which is really the worst case scenario. If everything completely goes wrong with us dealing with the Covid-19 crisis and we just can't control any of the outbreaks, that would lead to years of shutdowns and sluggish growth. Of course, these are just predictions that we can make, but the most definitive solution for sailing towards recovery is obviously the finding of a vaccine that can cure the virus. If we find one soon, we could have a U-shaped recession. If it takes a couple more years, that could turn into a W-shaped recession where the economy does try to recover, but the constant outbreaks just cause shutdowns again and again. And if we don't find a vaccine, all throughout my explanations, I've been using the term economy from a global standpoint. However, all countries don't recover at the same pace. Let's take an example of a hugely indebted and developing country that massively relied on their tourism industry or their natural resource that was high in demand pre-COVID. And since I'm making this up all along, let's just say that they're lagging behind in their healthcare system and their government cannot cushion the effects of an outbreak like the Federal Reserve in America did by pumping money into the system. Well, they're going to be hit pretty hard by the virus and they will obviously take a lot longer to recover. With all these things happening in the economy, Let's have a look at the stock market and see what the story is there. As you can see from the graph above me, you can see all three major US stock indices, the S&P 500, Nasdaq and the Dow. As you can see from the latter part of the graph, especially after March, all three of the indices are showing an upward trend. And some of you might wonder, what happened? Did the economy suddenly recover? Well, both of us know that's not true, but there are a few reasons why the stock market seems almost unaffected by COVID-19. And you're definitely going to understand the main reason when you take a look at this next graph. As you can see, the Federal Reserve pumped over $2 trillion into the American financial system in their effort to combat the freezes brought on by COVID-19. And that just happens to be the same day that the stock market decided to bounce straight back up like COVID-19 never even happened. It's pretty interesting that a government has such an extreme power over the stock market, isn't it? The Fed rally wasn't the only reason why stocks shot up like that. Share prices are results of investor prediction, and there were many cases of investors having FOMO, which is the fear of missing out, and that led to them buying more and more assets, which obviously increased the stock value. There's also the fact that not every single business model is going to be hit the same due to COVID-19. For example, a stock company in the oil sector or retail sector are going to have harsher consequences when trying to recover compared to a tech company like Apple or Microsoft. But all of this doesn't mean that the market isn't going to crash again. In fact, there's a very high chance that the market is going to crash, especially with the recent resurgence of COVID-19 cases, especially in America. This could bring about more business closures, and before we know it, the market could go as low as it went in March or even lower. Ultimately, the economy and the stock market are tied together in the long run, so it's always ideal to keep an eye out for when the time comes that the stock market does catch up to the economy. Because if that happens, I really wouldn't be surprised if we experience a crash worse than the one we saw back in March, completely throwing the V and the U recession shock shapes out the window. So that's it for today, guys. As you can all probably tell, with the rate at which the virus is absolutely wreaking havoc in all countries worldwide, it's safe to say that it's highly unlikely that the economy will experience a quick recovery, and it's also doubtful that the economy will go back to how it once was. Social distancing has become the new norm in society, and I don't see that changing anytime soon. The stock market is also in a very crucial position, and only time can tell how long it will keep rallying before succumbing to reality. I'd also like to know your opinion on these matters. Do you think that a crash is bound to happen? Let me know in the comment section below. If you liked this video, found the content interesting, or learnt anything new, please give this video a thumbs up and share it with your friends. I'd also be absolutely chuffed if you could press that red button to subscribe to my channel. Stay tuned for the next video, which will be coming out soon. Stay safe and happy trading.